in your pocket. Michael Hudson is the president of the Institute for the Study of Long-Term Economic Trends, an economics professor at the University of Missouri, Kansas City, and author of Super-Imperialism, the Economic Strategy of American Empire. He was chief economic advisor to Congressmember Dennis Kucinich. He is currently, as well as when he was presidential candidate. We welcome you both to Democracy Now! Michael Hudson, we're talking government bailout, which means taxpayers stuck with the bill. Do you think this is the right move?
No, it's the worst possible move, and it puts the class war back in business with a vengeance. Wall Street's been preparing for this for years because every financial analyst knows that the debts can't be paid. And the question that Wall Street has, if you're going to take a gamble on bad debts that can't be paid, how are you going to come out a winner? And there's only one way of coming out a winner, and that's to make the government bail you out. This has been known for years because it's inherent almost in the mathematics of compound interest. Every banker I know knew that the loans they were making were going to go bad. They were trying to sell them to somebody else, ultimately expecting them to end up with some sovereign wealth fund. And now you had at the beginning of the show McCain saying that this is the result of fraud and incompetence. The government's now bailed them out, but by bailing them out, Wall Street was coming to terms with the bad debts. When Bear Stearns went under and when Lehman Brothers went under, this began to wipe away the bad debts. And when the debts exceed the ability to pay, there's only one thing any economy can do, and that's wipe them out. Instead, the government is trying to keep the fiction alive. And what Paulson did yesterday in bailing out AIG was to try to lock in whoever is the next president, not only to further bailouts of Wall Street, ostensibly to protect the public money, but to make it impossible to write down the debts of the 4 million homeowners that are expected to default this year, impossible to write down the debts of companies that have issued junk bonds, impossible for the country to get rid of this excess of debts that can't be repaid, and you're having really a war now of creditors against debtors. And this is what Wall Street's been preparing for. It needed an emergency to do it. It's really not an emergency at all. This has been building up for many years. Everybody expected it, and breathlessly now, the Secretary of Treasury.
But of course, the argument was if you don't bail out AIG, it could lead to a global financial meltdown.
It's a meltdown of the gamblers, as Naomi said. These are people who've gambled. You had McCain saying they're gamblers. If these people have gambled, we're talking about derivative trades, billions of dollars of bets on which way interest rates will go, billions of dollars of bad loans beyond the ability of debtors to pay. Why on earth would you want to bail out these creditors?
So what would happen if you didn't?
Then you would prepare the ground for writing down the debts of the homeowners that have no way of repaying the exploding mortgages. Those interest rates are going to be jumping up this year. You'd be able to bring the debts down to the ability of the economy to pay, and you'd save these 4 million homeowners from defaulting and being kicked out of their houses. Now they're going to be kicked out of the houses. The houses will be vacant. The cities are going to now say, gee, we're going to have to cut the property taxes to enable the debts to be paid to save the financial system. So if they cut the property taxes, they're going to have to cut back local expenditures, local infrastructure. The economy is being sacrificed to pay the gamblers.
It's insane, actually. It's bad math, and it's a bad precedent, because they're not simply bailing it out with putting taxpayers' money through the Fed into taking on the risks of these companies. They're taking on risks. They're not bailing out and selling debt. They're taking on the risk. They're becoming, the Fed is continuing to become a larger and larger hedge fund. And it's doing it with taxpayer money, and it's doing it with the future debt of the United States. So for the one thing, they're not attaching any rules to these bailouts. You know, you bail out Bear Stearns, effectively you're putting up $30 billion to take Bear Stearns' junk and say, all right, we'll back the junk. JP Morgan Chase, you take Bear Stearns, we'll back whatever junk is there. But there's no decision to say, but you got to tell us what's there. And J.P. Morgan, by the way, as you're taking on this bank, you have to explain to us what you really have. And Bank of America, you have to explain to us what your risks are. I know that at Bank of America, they were struggling with their own risks and trying to figure out what was going on in their own company. And now they've assumed Merrill Lynch. That creates a tremendous institution where the Fed is now obligated when that starts to have more and more trouble, which it will.
What started all this?
What started all this is a complete lack of transparency and regulation in the banking system.
We are in the most serious financial crisis in generations. Yet Senator McCain stood up yesterday and said that the fundamentals of the economy are strong. That's what he said. Now, a few hours later, his campaign sent him back out to clean up his remarks. And he tried to explain himself again this morning by saying that what he meant to say was that the American workers are strong. But we know that Senator McCain meant what he said the first time, because he has said it over and over again throughout this campaign.
Meanwhile, John McCain tried to strike a populist tone on the campaign trail.
While employees, shareholders, and other victims are left with nothing but trouble and debt, the people who helped cause the collapse make off with tens of millions in severance packages. Disgraceful. I've spoken out against the excess of corporate executives, and I can assure you that if I'm president, we're not going to tolerate that anymore.
Professor Hudson.
His constituency are the people who've caused the crisis. That's who he's representing. Now, of course, you're not going to come in and say, I'm going to support the people who've caused this crisis at your expense. If you're going to bail out your constituency, you're going to say exactly the opposite. So what he's saying has no reality at all. These are the people who are saying there is no money for Social Security. We're going to have to privatize it. We're going to have to turn over your Social Security to Bear Stearns, to AIG, to the very people who've shown how they're mismanaging money. Imagine if the Republican program had gone through and Social Security had been privatized and these were the jokers who were managing your Social Security. They'd stick you with the losses. So these are his constituency. He knows he's not telling the truth. He's not paid to tell the truth. He's pretending that it's a crisis that has to be bailed out, that it's the financial system. But it's not the financial system that's being bailed out. It's the debt system. And it's the debts that the homeowners own and the industry owns. And now the government's coming on the side of the creditors who are going to close down the industries, sell them off to pay the debts, foreclose on the houses, sell them off to pay the debts, and the economy is going to shrink and shrink. That's the program that they're standing for.
They've always said that Social Security can't be bailed out, but that it's going broke.
They've already spent $5 trillion in the last 2 weeks to double the size of the national debt by taking over Fannie Mae. How can they bail out the gamblers? How can they bail out Wall Street and not claim that the Social Security system doesn't really exist? They've used the Social Security money basically for the bailout. There it goes. They've made a choice. The choice is to bail out Wall Street against the people. The Treasury is supposed to represent the government and the economy, and the Fed is supposed to be the board of directors of commercial banks. But now Wall Street plays both sides of the game. It not only supplies the heads of the Fed, it supplies the Secretary of the Treasury, and that's why I said the class war is back in business with a vengeance.
And Phil Gramm was the top advisor to McCain. What was his role in all of this?
He's the front man for the biggest crooks in the country. Basically, he says, don't regulate. He's responded to the lobbies by cutting back all of the information. The regulatory agencies don't collect the information to let them know what's happening. The government has no adequate statistics on what the value of real estate is, what the amount of debt is, because if it did have statistics, it would show that the volume of debt is far in excess of the ability of debtors to pay. And when you have that, you'd have to do something about it. Graham has said, don't collect statistics, because if you know how these guys are making money, they're going to pay taxes on it. And if you don't look at what they're doing, if you let them all do it through offshore vehicles, if you let them all bury everything, then they're not going to be taxed. And that's his constituency, to untax finance and to shift it on to labor and industry.